In this video, I'm going to start by referring to what I've already used in another video when I was dealing with your ordinary share capital. And I said that one of the most critical things that you're going to be expected to do is to calculate the buyback. That is, you split between the average price and the amount above average. One that must go to the ordinary share capital and the portion that is to go to your retained income. So I'm going to use the same example that I used to do the ordinary share capital, but in this case I want to do the retained income. So now if you're going to do your retained income, right, the template is that you have to start with the balance at the beginning of the year. Balance at the beginning of the year, then you add net profit after tax, okay, and then you subtract buyback of shares, this must be in brackets, and then you subtract dividends, right, this must also be in brackets. And your dividends are made up of two. That's your interim, and then your final, and then you're going to have equal to balance at the end. So I've drawn this template, but what I'm just going to do, I'm going to substitute here these x-axis that I put here when I'm doing the note. So if I check the information that I used on my ordinary share capital, you see that the balance of my retained income is given is 823,568 at the beginning. So this is 823,680, and then the balance at the end is also given. So this is the balance at the beginning, and the balance at the end is given is 1,457,600. So it's 1,457,600. Okay, so you will see that of the 1, 2, 3, 4, 5, 6, 7 figures that I'm going to need, I already have 2 of them. So if you look further in this information at the beginning here, they give you income tax and they say it's 28%, and they give the income tax to be 672. So I can actually calculate my my net profit after tax because I'm given the income tax amount. How do you do that? Okay, so in order to get my net profit here, which is my net profit after tax, this portion here, right, I'm going to say I always say what? Let me work it on this side here. Net profit before tax can always be denoted with 100%, and then your tax in this case is given as 28%. Then your net profit after tax will obviously be 72%. And then what you do is you're saying what you want to calculate, which is the unknown over the known. So what I want to calculate is the net profit after tax, and I'm given the tax, which is 28%. So you say unknown over known, or what I want over what I have. So what that means is that for me to calculate my net profit, this net profit after tax, I have to say 72 over 28 times 672,000, which is my tax, right? This is how you're going to get it. So it's going to be 72 over 28 times 672. So if I put it on my calculator, it's equal to 72 over 28 times 672, right? It will give me 1728,000. So this is 1728,000. So meaning to say my net profit after tax is 1728,000, right? The buyback of shares, we already did that, right? I'll show you now. When we still doing ordinary share capital, the buyback of shares was already done on this particular activity. Why? Because we said the buyback was done at 1.10 10, and then we calculated average price and we found that it's 50 cents. And then if you multiply by the 144 shares that were bought back, it gives you 72,000. And then the amount above average, which must go to your retained income, is 0.6 times 144,000. It gives you 86,400. So the buyback was actually done before, when you're still dealing with your ordinary share capital. So here it will just be 86,400, and this figure must be in brackets. How did we get this figure? If you want to know how we got this figure, we got it by saying 144,000 shares that we sold times 0.6, which is the amount above the average price. That's that 144 times 0.6, and it will give us 86,400. So what we are left with is the dividend. So we need to look at the dividend information. So on the dividend, they said here, okay, before we go to the dividend information, you need to take note of this last bullet here, right? The last bullet on your information. It says, on 1 August, the company issued an additional 934,400 new shares at 125. These shareholders qualify for final dividend. In other words, all the shares that we have in issue qualify for final dividend, including these ones. That's what they're telling you there. Okay, now, so when you then look at your dividend information, it's provided here. So your dividend information is saying your interim dividend is 9.5 cents per share, right? That is your interim dividend, which means it's 9.5 over 100, right? Times the number, this is your interim, right, times the number of shares. Now for your final is going to be according to this is 20 cents per share. So it's going to be 20 over 100 times the number of shares. So what becomes critical is to check the number of shares, and what will assist us is to look at what we've already done here. So at the end of the year, when we did our ordinary share capital, we discovered that this is the number of shares that is qualifying for final dividend. So here I'm going to multiply by 3670,400, right? That's my final. But as for the interim is determined by the time that this buyback occurred. So we need to check the date of this buyback, because if these shares were still in issue, they qualify for interim dividend, but if they were not in issue, they do not qualify for interim dividend. So we need to check the time there. So if you check, the repurchase was done on the 30th of June. So 30 June, that's when this repurchase occurred. So then your interim dividend was 31 May. So in other words, the dividend was declared and paid before the shares were bought back, which means our interim dividend, all the shares that were there at the beginning of the year qualify, which is times 2,880,000. Right, this is what you're supposed to do. So now we can calculate what our dividend is. So for my interim dividend is going to be 9.5 over 100 times 2,880, and then that gives us 273,600. So this one will be 273. The interim is going to be 273,600, right? And then the final is going to be 20 over 100 times 3670,400, and then that gives us 7. This gives us 734,080. So this is the information that you need on your dividend. So I can actually go and plug in that information on my interim and final dividend here. So my interim is 273,600, and then my final is 734,080. So if I add those 273,600, that will give me 1,007,680, right? And then you can try to verify from the top if this is going to balance, since our closing balance was already given. That's 823,680 plus 1728 plus minus 86400 minus 1007680, and it will give us, it gives us that 1457600. So this is our ordinary, this is our retained income, which is your note number, 8. So the most critical thing, as you should have seen by now, is that if you check on my retained income, I have buyback of shares, right? On my ordinary share capital, I also have buyback of shares. That repurchase refers to the buyback. And the most critical thing, in order for you to be able to do both of them, is to be able to do your what? Your buyback fork, in order for you to split between your ordinary share capital, which is the average price, and your amount above average, which must go to your retained income. Thank you.